Welcome, Cookie Jar Trading FX. This is your host, Eric Foreman, here to drop all the cookies into the jar for this upcoming week. Thank you for joining the Brownie Bite weekly analysis. An analysis I usually do on Sundays to see what I am looking at for this upcoming week. Today is August 2nd, so it is a new month. Which is important because we want to be able to assess, okay, how did we close out in July, and what can we look forward to in August potentially, which I'll get into in a second. The other part about the beginning of this month is so critical because here in the U.S. we are dealing with the new stimulus package and bill that may be passed, and their deadline is this Friday, August 7th. So that's going to be a major thing. Friday's also the non-farm payroll, and I'll get into some of that as well. We can look into what those sites is looking at. So we'll go to Forex Factory real quick. One of the premier links to use when it comes to the Forex market. So highly recommended. So we'll kind of see what we have going on for this week. A lot of news. So I usually filter out news impact between red and orange. So kind of keeping it that way. But Fridays, as you can see, we usually get the NFP, the non-farm payroll, employment numbers. But also, again, this is the deadline. So hopefully Congress can kind of come up to a decision by Thursday, they saying, to have the bill signed off and pretty much submitted to Trump for the final say, and then they'll determine on the challenge. I think where they're stuck at now is the unemployment benefits and really deciding on an agreeable number for those that are still unemployed because of this corona pandemic. And how to move forward. So yeah, we should see a lot of activity this week, especially towards the dollar currencies, which are a number of my currency pairs for this week, which I'll share that with you as we go through. So some of the pairs that I'm looking at this week, which I'll get into, is Aussie dollar, Aussie CAD, New Zealand CAD, Euro dollar, dollar Swiss, pound dollar. These particular currency pairs tied in very well with some of my playbook strategies. So if you watch my first video, you will kind of know what some of those playbook strategies are. The cone trade, the market open gaps, the 10 bar run up extension, the flat 200 or curve 200, bear 180, or just some resistance tied in with the RSI line, flat 50, double scoops, so on and so on. These are some of the strategies that I've seen with these particular pairs that are increasing my likelihood and reason for interest. So let's go back to the charts and let's start off with Aussie dollar, right? So that's on here. I have it highlighted as a potential short, right? And why so? Reason being is because if we look at the monthly, right? So we're starting off top-down analysis, starting from the highest top frame, working our way downward. So if we're looking at the Aussie dollar, we just came into this 50 in May. The 50 is important as we kind of dissected and stated in my strategies. If it's a downward 50 in May, then we know the move is it's potential downtrend. This particular MA on the 50 is somewhat flattening, but we still got to respect it because some type of rejection may happen here. Just as a slight pullback, just for a breather, before it continues to push upward. Do I think the overall move for Aussie dollar on the monthly long term is to the upside? Absolutely. But usually when it comes up against the 50, we'll get some type of price rejection until this 8 kind of crosses the 20, and then we'll kind of build out from there. So I will anticipate a short, at least for the early part of the month, possibly, before we start really getting a rally to the upside. kind of working our way downward. On a weekly, this is where it gets a little bit more tasty. So we just came up against the weekly 200. Nice little rejection off of that. I'm liking the location of it. And obviously the 200 on a weekly is major resistance. That's part of one of our trading strategies. Come up against that and then let price kind of correct itself. And it's a downward kind of 200 in May. So I am liking this potential a lot. And it's a wick, nice little topping tail. Not a big topping tail, but it's reasonable for a rejection off of the 200. The other match that we are getting is that we're coming up towards the 70 RSI line. Now, my challenge with that is that I personally usually prefer if the RSI level or line is directly connected or even broken above the 70. So for this, we're not exactly there. So that would kind of be my only iffy part about taking a trade early, is that it may potentially break still above the 200 before it actually corrects itself to come down. So we may still get a little action to the upside before it comes down. But let's see what the daily's looking like. So the daily, we getting a little pierce break through the 8. It's not extended. But if you look at the RSI line, we've already broken through it and we're already heading down. Like you see that downward trending direction. So there's some potential there. But based off of just what I saw in the weekly and the daily, I'm like on this, and I usually like the scale, and I should have had it on my, I guess, trading picks. Based on a scale of 1 through 10, I could type it in here actually. If I'm gonna scale it out, I'm probably just gonna put this at maybe a 7. Because I like the weekly, I like where we're at. I like the daily with the RSI level, how we already broke and we're starting to break down a little bit. So there's some potential there, but I don't know if I'm gonna trade it because it's not as ideal as I would like it, at least from a daily position. So I might end up passing on that one. Looking at AUDCAD, I remember looking at this and seeing it and actually preferring this opportunity better based off of just almost everything. So again, similar to Aussie dollar on the monthly, we came up against this 50. So if we look at the 50 again on the Aussie dollar, we came up against the 50. The only difference is that the wick or the tail end of this candlestick on Aussie dollar is directly connected to the 50. On Aussie CAD, we kind of broke through the 50, but still was able to close out below the 50 on the monthly for the month of July. So that's still critical. We still should see a reasonable pullback until this 8 crosses over the 20. So I'm looking forward to that. Breaking down now to the weekly. This is where it gets a little bit more interesting. So the weekly for the 200 is starting to curl. It's still somewhat trending down. But what I like are the wicks. The wicks is just what it was really grabbing my attention here. So we're getting this break above the 200, but then it closes back below. And then last week we get another break above the 200, but then we close exactly at the 200 level. But also what I'm noticing is this little spatial gap here. So if I look back at one of my strategies, right, one of my strategy picks, what I like is, remember that cone trade. So causing an open gap potential where the 8 and the 20 are extended from itself. So when I look at, when I look at the 8 and 20 here, it's extended a little bit too far from each other. So I like this. Like, I really like this a lot. And then if we measure out some resistance levels, obviously We're matched up on some levels here. It's kind of a nasty area. I'll put a little box here to make it a little bit more visible. But this whole area just gets a little sloppy and nasty here. So the resistance is there. So that's the reason why we're seeing price action just kind of keep tapping it. So I anticipate a nice decline here to the downside. At least confirmation break through the 8 would be nice. So I think that would be more ideal for an immediate attention to the trade. So I think it's something to watch out for. Would I jump in now? Maybe. I might look into getting into it for this week for sure. But would I prefer for a nice break at this 8 in May on a weekly? Definitely. But we might not end up getting that until the end of this week, going into next week. Because once we break that 8, then it's a confirmed cone trade. And that I'm not putting any questions on. But the thing about the cone trades is that you do want to catch it early. So I like catching my cone trades early because I spot them early. So I might end up getting into this a little early. The only thing is that it's not going to be a short-term trade, like a move-to-move trade. It's going to be like trade the hold type setup. So I'm going to be getting in it, but probably holding for a few weeks. So I might end up putting a 0.10 on this and then just letting it ride out. So, I mean, we're talking about at least 400 pips at bare minimum for the upside. So if I put a 0.10 on there, I'm potentially looking at a $400 gain. So that'll be good for the next few weeks, just to kind of put the trade and just let it do its thing without any thought, because I do anticipate a decent decline. So I might end up looking to do that. So I like Aussie CAD a lot better than Aussie dollar. So I'm going to give that a grade. I'm going to give it a 9. I like it a lot. Then I'm also going to just put here as a note for myself, long-term trade on weekly, trade to hold and let it ride. That's it. So yeah, we'll let that one ride out. So I'll look for an entry this week, early on, and just let it go. Just let it do its thing. I'm not gonna be worried about intraday trading it or none of that. So next up is New Zealand CAD. So we'll scroll over a little bit. Look at New Zealand CAD. So again, similar, just coming off the monthly. Nice rejection off of the 50. Loving that. So we're seeing that a lot of activity is coming off of this. New Zealand and Aussie dollar pairs. I mean, not Aussie, the Aussie pairs and New Zealand pairs, that prices coming up against these 50 MAs, and we're looking at some nice rejection. So in a second, we'll look at the Aussie index to see what's happening. And again, I'm loving New Zealand CAD. This is even better. My only challenge is this RSI level. We're not exactly plugged in here. And I don't know if I looked at the RSI level here on Aussie CAD on the weekly. Up. So if you look at it, we're directly connected to the 70, as I said, my most favorite. So based off of that, I'm even more interested. So yes. New Zealand CAD, I needed to touch that 70. Like I really do, to give me more confirmation there. But it's on a declining 200 on the weekly with a beautiful topping tail. So to even take the trade and again just let it ride wouldn't be a bad idea for a few hundred pips. I'm not against that. But we have a bear 180 here. So if you look back at the strategies, if we look back at it, what do we say? Bear 180, bull 180. That's one of our Cookie Monster trades, and we have it on a daily. So if this occurs on a 4-hour daily, the move is pretty solid. So what that does is that it confirms our potential for downside on this weekly now. So we should see a reasonable decline, for sure. And maybe we'll get a pullback early on, But overall, this is a good move because the Bears are retaking control. So very good setup there. Um, and New Zealand CAD, I just love it. Again, you got the open gap between the 8 and the 20. So once price actually breaks that 8 on a week, we should be seeing a nice cone trade to the downside, and I'm going to be eating that up. So definitely, I'm going to rate New Zealand CAD as a 9, and we'll look to take full advantage of this one as well. So for sure, and again, this will be a long-term trade on weekly. We'll trade the hold. Come on, what's going on here? Trade the hold and let it ride. And then also we have a bear 180 on daily, more critical, and potential cone trade, potential weekly cone trade. So yes, I'm all with that. Next up is euro dollar. So let's see what we're looking at. I'm gonna change my profile to the euro pairs, and we'll see what's happening on euro dollar that I had liked so much. I've been watching this currency pair for a minute, and we had some huge upside for the month of July. Early on in July, I was anticipating some declining activity, just never got it. Like at least the pullback, and I don't know why I was anticipating that, but the move was just vicious to the upside, but in a very great way. So again, looking at the monthly, we got a huge break to the upside. The challenge is the location. So event and location is everything. That's how I was taught. So it's not always about like just looking at strategies. It's also about the candles. Like when we looking at candlesticks, we're looking at the event. So like what happened? Like what size candlestick did we get? What type of candlestick did we get? And then it's also about location. Like where's the candlestick located at right now? So we look at this line right here. It's a bit of resistance here based off of these areas, right? So we have this area here. Come on, y'all. I don't know why I clicked the wrong one. We have this area here. Shapes. So we have this box. That's a nice little resistance level where price bounced off of it. We have this area here retested. Serious break. And then we have some clouded area just in this previous area here. I wouldn't really count it though. But it can somewhat be counted. And then obviously some activity here. So all of these is previous strong resistance areas or major support areas from past history. So for price to come up in this area and then reject is a solid foundation and a solid call for price to start dropping. So what do we get? We get a topping tail, right? So 50% of this candlestick has been eaten up, just about, into that area. But we're also quite extended from the MA. Now, like not only the 200, but we're extended from the 8. And remember that rubber band concept that I speak about, you cannot be too far from, the candlesticks are never allowed to be too far from the moving averages. If you stretch the moving averages out, it has to come back to its original form. It has to reconnect with it. So when we're looking at this extension, right now you're talking a little bit over roughly 550 pips. So it's 550 pips away from the 8. That doesn't sound right. So price has to come back in for a second. So we should start seeing some pullback activity. Based off of the resistance area that we're in, this is all resistance. This is all a sell zone right now. And also based off of the extension of the moving averages. It has to catch up. But I'm also going to include the sequence too. So we got 1, 2, 3, 4, 5. We got a 6-bar run up. We need a second to breathe. So the market has to inhale and exhale. So it inhales all of these candlesticks. So it has to exhale back out with some type of bearish activity now, just to kind of allow price to breathe. So what do we get on the daily? We got a nice topping tail, a nice solid red candlestick to showcase some reversal. We're also a little extended too. But if you look at this RSI level, look at that. Just well above the 70. It's been gravitating above it. Just chilling up there for the past few weeks. Past few days. All last week it was just hovering over the 70. Knowing damn well it's not supposed to be up there that high. So what do we have now? We have price starting to reject that back down below. So I will definitely be looking to short this week. One of my most favorite pairs going into this week. And I'm going to rate that at a 10. And we will short that bad boy for as long as we need. And again, it might it may go longer where I might not have to be in a move forever, and then even also the weeklies at the 70 RSI level. I didn't catch that, but I'm catching it now. So we might be able to trade this for a little while. I'll put in the fib levels real quick just to kind of see potential targets. So let's say I entered there or whatever. I would also have to measure out some support level targets, but I think the 382 would be reasonable. The 23.6 would definitely be a starting target for about 175 pips there. The 382 would be another decent target for about 360 pips. So yeah, I think I have some opportunities there that I'm looking forward to taking advantage of. Euro dollar, top of my list. So let's keep it moving. Dollar Swiss. Right, so we'll switch out our profile to dollar Swiss. There we go. So dollar Swiss is the inverted correlated pair of euro dollar, right? So if we're looking at euro dollar, whatever's happening on euro dollar, pretty much expect the opposite on dollar Swiss. So dollar Swiss is here, and it's not exact flawless, but just anticipate if you're going short on euro dollar, then you might want to be looking to go long on dollar Swiss. So the monthly, we got a declining activity there, real strong and aggressive. I'm not seeing any potential trade or trend lines. At this moment, maybe, yeah. We might have a little something here. What we working with? There we go. We got a little upward trend. So now we just came up against that trend line. Yes, let's work. So price is at that trend line now. So we looked at that monthly, then a weekly. Let me bring up my RSI line. Sorry. Let me see what we. All right. So we got a nice little bottom and tail here. 50% of this candlestick eaten up. What did we talk about? The extension away from the MAs, right? So prices extended from these MAs, and it's too far. Got to catch up, and especially for dollar Swiss, since this particular currency don't offer a lot of pips. So for it to be 262 pips away from the 8, that's kind of far. So we don't get that type of activity often. So definitely want to make sure I'm looking at a potential upside there. And then here on the daily, we're definitely extended because we've broken the 30 and we're all the way down to the 15, already starting to work our way back. But the other component to it is that we have this sequence of red candlesticks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if you pay attention to that strategy book, what did I say? What did I say? If we're extended that 10 bar, the maxed out 10 bar run with extension, any candlesticks on a run up over 10, or run up or run down, over 10 bars straight, that starts extending away from the 8 and 20 is set for a strong correction and pullback. So that's exactly what we ended up getting on Friday. So you see how we had that 10 bar drop. Put this down a little bit. This 10 bar drop, and then we pushed, price started working its way back up. So now what we should be coming up to now on a daily is a break above the 20, and then potentially seeing a nice little connection to the 20. I mean, the break above the 8, and then seeing a nice connection to the 20 MA. So that wouldn't be a bad trade. Looking forward to it for a short-term fib target that would make sense. So we're breaking above. We can see that the 618 meets that 20 MA. But in reality, as the week builds out, the daily 20 MA will start working downward. So the target will probably be more of the 50. So I'm looking at a potential of about 132 pips on that. So not a bad opportunity there for at least an intra-week trading opportunity to take advantage of. So definitely looking forward to that one. So I like that. I like dollar Swiss for an intraday opportunity or intra-week opportunity. So I'm going to rate that out of 10. And we have a lot of things from our strategy that plays, or a lot of things from my strategies that play into the opportunity that is presented on dollar Swiss. We have the 10 bar extension. We have the potential cone trade setting up. I have a trend line, an upward trend line from the monthly set up as well. Use the support. There's a lot of great factors that I'm really digging into for this one. Last one is pound dollar. So we'll look at that right now and start off on a monthly. So pound dollar is great. It's like the monthly, obviously still in a bullish sentiment and setup. We got a nice close above the 50 MA for the month of July, and should still be seeing that price action to the upside long term. So that's great. If we look at the weekly now, we got a break above the 200, which is great also because we're going to start seeing some upside as well. Now, my challenge with it is this daily, right? So we talked about the extension, 10 bar extension, so we could count this out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we already 10 bars up. And now we have a little, what I call a rising star kind of topping tail that presented itself on Friday. Plus, if you look at the daily, we are too aggressively extended over the 70. So I think not really for the week, unless we end up closing out in the red on the week and this ends up being a bare 180, which I doubt. But I think it has a decent potential for a decline here, for a nice little sell-off. I don't see it as a RBI, which I would call a red bar ignored. I don't see it as like a 10 bar sequence, and then we get this like rising star, and then we get more green bars after that. It can, but I just don't see it because the levels are too high at this moment. Plus, we are somewhat. Let me zoom in too. We are now somewhat extended from the 8 by 170 pips just about. So yeah, I think it's kind of time just to kind of correct. So if you even look here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 bars here, right? So this is like the same thing. So price shot up and then came down, broke through, and we at least saw the correction or whatever. The only difference is that this candlestick is green, that candlestick is red, but they sure look the same. And the candlesticks to the upside are the same sequence of bars. It's 10 bars here, 10 bars here. So to say that we're not going to see some type of pullback wouldn't make any sense. So I think there is a pullback potential here for sure, definitely this week. So I'm definitely going to put that at a 10, and I'm going to put it at a 9, only because the weekly is set up for a push up, but I do like it for a short for sure this week. And I'm just going to type in here just for my own knowledge, just real quick. Daily short potential after 10 bar extension replicated from prior weeks, right? So as I said, like from the previous weeks before, back in May, we had the same exact setup, and it's happening again. So we should be good. So that's it on my analysis. So I will keep everyone posted on the trades going into next week. As you guys can see, and I'll share this real quick, my balance is exactly at $1,000. It's a live account, my live account, and we'll build out from there. There's no trading history here, no profit, no losses, nothing. So this is exactly, we're starting at 1,000, and we'll build it out from there. So yeah, hope this analysis helps. For any traders, I look forward to any feedback. Definitely looking forward to this trading week. A lot of great opportunities and moves in the market that are readily available for the grasp, and I look forward to taking full advantage of all of it. So please, if you like the video, like the video. What else? Subscribe, share with friends if it can kind of help on their journey and their path, and finding a community where conversations like this is happening, analysis like this are being given, and some relatability on what you may be looking at. So yeah, I'm always open to connecting with other traders, but most importantly, really pushing the ideologies of what's possible. So I'm looking forward to starting to build out the profits on this $1,000 account and getting it to where we want it to be, because what I've done in the past are extreme, unbelievable profit potentials and gains that I've experienced, and I want to be able to share those ideologies and those real experiences to people out in the market. So yeah, thank you. Happy trading, safe trading, preservation of capital, and trade smart, trade right, and don't go against don't go against your plan and your strategies, but be good, be safe, and I'll catch you guys on the video tomorrow. All right, have a good one.